Good morning and welcome to Equity Story Trade Watch. We've got Wednesday today, and middle of the week sees more of the same what we saw Monday and Tuesday, which is a bit of a recovery from this beaten down tech space. And NASDAQ was the real standout last night actually on the US, while the Dow fell back. Before we go on and talk about what's actually driving this all around, Equity Story disclaimer in front of you. Everything we talk about today is general in nature. Any specific stocks we refer to, we look at the fundamentals and the technicals only. All right, so let's change the screen first of all, and then we're going to talk about the actual driver of the markets. And today we've got our markets lower on the back of the BHP bulletins, Rios, gold miners all heading lower, with commodities really getting a bit of a hammering overnight. We've got, I think I saw copper at 19th-month lows. Oil really collapsed last night. Gold plummeted. It just hasn't been a great night for commodities. In fact, they've been falling for some time now. So like we've said, like we've been talking about, if you're wearing these war stocks, you probably would have been out by now from most of them because they've probably broken trends. But we are going to have a look at some charts in a second, especially the gold miners. It's really looking pretty sad, I have to say. And there is just nothing there to get excited about in that space. So we're going to have a look at that in a moment. There is actually not much actually to talk about this morning company-wise. So we're just going to talk about some of the actual themes that are happening. So first what I want to mention is the actual economic, supposed plays at the moment. And we've got inflation, of course, which the governments around the globe are trying to tame inflation through rising interest rates, which is possibly leading us to getting into recessions. Now, in a way, good and bad. If we do get into that recessionary type situation, then possibly you're going to see some of these inflationary pressures actually ease off, because that's the reason why I think oil has been pummeled at the moment, because that's the strongest theme right now, where you've got oil prices heading now on the back of fears of recession coming through. And that's probably also in some ways put towards the commodities as well. Maybe more China centric as well. I mean, China at the moment is actually in a very interesting position because they've got that, I suppose, by the Chinese government talking about the COVID play, that they're going to be shutting down every single time there's a bit of an outbreak, which is not ideal. In fact, it's probably a terrible idea to do so, because all it's going to do is probably hurt the Chinese economy and probably global economy as well. So that's approach is just so, I suppose, inadequate, and really you got to get on with it and move on and just deal with COVID in other ways. But that's just the Chinese government for you, trying to control everything. And unfortunately, I think they're going to become unstuck if that sort of continues. Second thing, with the big wet here in Australia, right? The flooding and so on. Articles in the paper, media talking about our agricultural sector, and unfortunately now suffering because there have been a lot of crops planted and now they're underwater, which possibly could mean further inflationary pressures here for us in Australia in the agri space, which is not great. So for us, macroeconomic situation right now is going to be fairly tough. However, we're not as bad positioned still as I think some of the other places around the globe, like maybe Europe. So for me, again, forces playing here and there, while our agri sector is good, right now possibly could come under pressure. So you might see some of the other stuff coming through and maybe putting some pressure on the charts. And let's actually have a look at some of these elders and GNCs and RICs of the world. So that could be quite an interesting view, just to see exactly where we're at. Because like I said, if everyone starts reading that sort of stuff, we might see further falls to come. So let's start with elders and see where they are. So here, I hope they can hold up, because like I said, I think overriding feeling I've got is that agri-space should be better and should be doing good. However, short-term flooding like this is not great. So let's have a look. So that's not too bad. That's still holding trend, which is not bad. Let's have a look at RIC. And we'll have a look at, so RIC is definitely heading back to that 165. Hopefully it'll bounce like before, like you see here. That's a pretty similar pattern, bounce and goes up. And let's have a look at GNC as the third pillar for us. And GNC, you can see it had a pretty big big jump up. Now it's come back, which is okay. As long as it bounces off that 830 levels, and it seems to be doing that, it's not too bad. It's had a massive run, so not surprising, has a bit of a breather. And while this is a little bit scary, of course, this candle. Let's just wait till the week and see actually what happens. So let's go to the commodity now. We talked about the driving forces at the moment. They're actually heading down. This is why the market's down at the moment. So let's have a look at the actual index, commodity index, which is going to be the key for us to see why things are going down. And I've got here that Refinitiv index. As you can see, the commodities index is heading down. It's broken support about 4 weeks ago, right there. That was the big time to sell pretty much all your, most of your commodity stocks, I'd say, and just sit on the sidelines for a while. And it's still going down. So no respite at the moment. I'll be probably sitting this one out and maybe concentrate on other areas to play with for the time being. Even oil and gas got hit, like I said. So that's not even a place to maybe park your money right now. So let's have a look at some of these stocks in this space. So VHP. As you can see, that's now going through 38. That's the last. If you're still in this, for some reason, this is your last line. If you finish like that by the end of the week, you're out. There really not much of an excuse because that could potentially head back to 35 bucks. Next one, let's have a look at the S32. Again, that's got heading lower. We got probably 359, maybe 320 even. And next one, let's have a look at maybe Linus, just to see where they're all at. That's not great either, but that's not too bad. It's probably better than the others. It's still holding, so that's still technically a hold. Let's look at Iluka. That's below the trend. So if you're in this as a trend trade, you're out. Maybe longer term, you can still make a case for it on a monthly. Let's look at IGO. And we're going to have a look at one of these lithium plays just to see where they are. So you can see that's even losing steam as well. Let's look at, for example, AKE, just to see where they're at. All right, doesn't want me to look at that. So I'm going to look at PLS instead. And that's probably now heading back towards that $2 again. So you can see across the board. Now let's have a look at gold, which is another interesting. And I talked about yesterday on our ATA that if that goes below 1,800 bucks, it could be good night gold. So let's see where this is at. And that looks ugly. That looks ugly on the weekly. You've got, let's have a look. You've got really, I'm going to see if I can find some, some excuse to hold this. So you've got maybe it's 1,800 for sure. That was a natural support, right? That's broken through that. That's broken through that actual trend as well. So your last line of support is by previous dips. So you had 1,750 and 1,700 bucks. That's the last really, any smidgen of anything you might have in this is in the last $100. So you've got $68 to go, but I'd say I'm out below 1,800. If you've got anything else, then let's just have a look at a couple of gold stocks because that's looking pretty ugly, I have to say. And the thing is today, Alkane, and this is probably the only one I saw that actually came up with some interesting results. Well, not results, but just an update. Looked pretty good because they didn't actually talk about any inflationary pressures, which is nice. They didn't say that, our costs are going to blow out. So that was a very big positive for me. But anyway, let's have a look at NCM. So I'd say some of these charts are going to look really, really ugly. As you can see, NCM, EVN, another one, it's just untouchable. NSD. Look at that. Maybe look at Bellevue, BGL, as up and coming gold. Yeah, it's just they look all very, very similar. So pass for that. So the last one we're going to look at is Alkane. That's came out with their sort of update today. And I suppose it's the only one that's hasn't gone out too far today because, it's similar type of chart, but like it's not a bad, they've outperformed the production, which is always a nice thing to see. They've also said the costs are going to be within the range that they talked about previously. So they still should make some money. They've got over 100 million in cash and bullion and investments. So that's nice. And they've got that big resource that they've announced not too long ago. So all up, probably my favorite stock at the moment, I'd say, in this space. But untouchable right now, untouchable. Let's go to some other stuff. And I think, like I said, you've got a lot of things happening here that are not positive for the commodities. So one other one is coal. And I'm going to look at a couple of charts. Now, you'd think to yourself that China, while they are, the prices of coal are going up, or it's quite strong, there's another driving force here where China is buying coal of Russia, which means they could possibly get into this coal much cheaper prices that the actual market suggests, right? And I presume this is what's happening at the moment with Russia and China, because the actual the coal shipments from Russia to China apparently doubled, and they're still not buying our coal here in Australia. So, look, it's a dangerous spot, to be honest, with coal. Let's have a look at a couple of these charts and let's see where they are. And I'd say it's starting to look a little bit like it might break that 450. So I am going to be very wary here by Friday. You've got to be very on top of this. And let's have a look at Whitehaven as well to see where it's at, because like I said, that relationship between China and Russia is not great for what we're thinking might happen with some of these commodity prices. So even though Ukraine-Russia war is still raging on and is driving a lot of these inflationary pressures, the fact that we are driving towards rising interest rates, towards recessions, that's now, it seems like the overriding factor over that war, which is quite interesting. So as you can see, fairly similar charts. Let me put NAHC because I think I put WHC twice. So let's have a look at that one. Yep. So that one looks still, not bad, probably better than WHC, but you'd be worried if it gets bent under 330. Let's move on. So let's look at oil, SDO. Let's see what's going on there. Because like I said, that was a big fall last night. And it's not obviously looking great for SDO. That's below trend, so you've got to be out of that. WDS is the other one that's looking, that was actually looked okay, but yeah, a bit of pressure coming through. At least that technically still, this is still a hold, so it's not too bad. And let's have a look at Worley as the third option in this space. And let's see what's going on here. I'd say that's going to be, well, it's still holding on, which is quite nice to see. More industrial, oil and gas type play, but that's not too bad either. But watching it toward the end of the week, we're going to probably make some calls by then. Let's see how things go. So let's look at a couple of announcements from this morning. SXG. So remember I had this big announcement about a week or two ago, 113 meters at about 3 something, I think, grams per ton. So that was pretty exciting, but it's not looking great right now because they followed it up with, let's go to the weekly and go to 1 year, because they followed it up with an announcement talking about really much poorer results in Victoria than they had previously at the 113. So smallish, very tiny, less than a meter, high grade, but less than a meter. So really didn't follow it up at all very well from that one. So there's going to be disappointment in that from investors. As you can see, this is exactly what's happening right now. So I'm just going to put it on, and I don't want max, I want 10 year. Just move this down if I can. Let's see, come on, let's work it here. Thank you. I'm going to do this again, so sorry about that. I'm quickly just going to have a look through. Some of this is really temperamental. Let's go to 2 year daily. Let's go back to SXG just to see exactly what's happened today. That's down 20% as expected. As you can see, great jump in just before June in May on that big 113 meters. And you can see it's been drifting. And today's as a result weren't great at all. So that might now come back and fill that gap right there. So I'd probably be completely out of this for now and really finding something else to play with. So that's how I see that. Apart from that stuff, really, not much else is happening. So let's have a look at what's actually happening in the tech space. That's what's that interesting thing for me. So that bad news we talked about now, let's talk about the good stuff and the tech space. So this is the third day now. We've had really interesting bottom fishing. We've had the NASDAQ go up. We've saw some of the really beaten down tech stocks starting to find some favor. And maybe it can follow this through. And maybe the markets are looking through, like I said, if there's going to be a recession, inflationary pressures might drop off, which means lesser rises, interest rate rises. But how that plays out, we're not sure. We're going to find out. But there has been some buying in America. and it's now following through again here in Australia. So let's see what's actually been going on in some of these stories. So the one we talked about, AIM, is another 9% up. We've got some of these dubbers that's been smashed. Let's actually click on these something so you can see the actual charts here as well. So you can see that's starting to swing a little bit. But like I said, 3 days does not really tell you that this is, we're back, baby, we're back. So you just got to be patient. I know if you're bottom fishing, which you probably shouldn't, but if you're going to take the punt for the long term on some really beaten down stocks as a little bit of fun on the side, contrarian type plays, you got to have the long term view, because what could happen is you might come down here, might have a little bit of a bounce, try that resistance and come back again if we think the markets again will turn down at a better stage over the next few weeks. So just be wary of that, but it's nice to see at least some of these stocks having a little bit of a bounce. Another one, E-Road, we talked about as well. Again, looking a little bit better. You can see the bounce this week. What else have we got in here? So AI, Live 360, let's have a look at that one. The really interesting one are the big stocks, right? So yesterday, the day before, the smaller, the really beaten down little tiny tech stocks were down. But today, the bigger stuff are starting to come to the fore. So we've seen, where is XRO? So this one looking much better. Look at that. That's much better green candle here. Can they sort of claw their way back to that $92? That will be nice to see. So PEXA Group, another one I saw today. I think UBS talking very positively about PEXA. So let's have a look at that. That's sort of recovering as well. So there is something to this, right? That's we thought it might take a bit of time. Let's have a look at Aristocrat Leisure. Another, I suppose you can call half tech stock. And again, that's really looking interesting for next week. Can this follow through? Seek, another one beaten down. So you can see the bigger style stuff is starting to come to the top. So if you're forget about the commodities, maybe there's a bit of fun to be had on these tech stocks right now. And over the next couple of days, we're going to talk about a few more, maybe of what our preferred ones are in this space. But it's just nice to see. And we talked about them, right? We talked some of these stocks are so cheap, ridiculously cheap, that they are pretty much priced to going broke. So if that doesn't happen, and if you take the long-term view, shut your eyes, nibble a couple, you might come out, forget about the charts, because the charts are not working at the moment. It's still below trend. But if you, make a couple of long-term plays, couple of really good stories, tech stories that you think might recover over the next 3 to 5 years, you could do quite well out of these things. So yeah, we're going to see if we can find some more for you. Anyway, I'm going to let it go today. Thank you so much for listening, and have a great day. And I'll speak to you again tomorrow.